For years, directors assumed HMRC was slow and it was easy to stay under the radar. That world has gone. HMRC can now flag your account in seconds, not days, not weeks, seconds. And the scariest part is this: you can be flagged even if you've done nothing wrong. Now, HMRC will get data from banks, payment platforms, digital marketplaces, accountants, and even your social media. One mismatch, one inconsistency, one late filing, and their system will automatically generate a risk score, and you're now on the radar. Now, if you don't understand what triggers HMRC systems, you're going to walk straight into a tax investigation without even realising the trapdoors underneath you. Now, once an inquiry letter lands, the pressure, the anxiety, the costs, it can all ramp up fast. And for some directors, it leads to frozen bank accounts, penalties, interviews under caution, or even an insolvency if you can't resolve it. Now, let's talk about the red flags that trigger HMRC. And the first one I'm going to talk about is unexplained bank deposits. This is the number one trigger behind most HMRC inquiries today. And it's basically if money enters your account that doesn't match what you've declared. HMRC's AI, it's called Connect, it'll flag it instantly. Let's say you told HMRC you earned 40 grand last year, but your bank statements show 80 grand in credited deposits. That mismatch alone can generate a risk alert. And here's what directors forget. HMRC in 2026 see everything. They get data from the banks, from the building societies, PayPal, Stripe, Airbnb, eBay, booking platforms, crypto exchanges, digital marketplaces. It doesn't matter if the money came from a family member, it was a personal loan, it was a one-off sale, a refund, a private transfer. If it hits your account, HMRC assumes it's income unless you can explain it with evidence. So this is how I believe you need to start protecting yourself. First of all, keep personal and business accounts separate. Document private transfers, label them clearly, and keep evidence for everything that hits your bank account. Never mix trading income with personal gifts or loans. Most inquiries will start with confusion, not suspicion. So if you do things and give it a bit of clarity, it should prevent that. Now, number 2 red flag is late or inconsistent tax returns. Now, if your tax returns are late, HMRC assumes you're struggling with records, or worse, you're hiding something. A single late return isn't the end of the world, but consistent late filings, that's a pattern. And patterns trigger compliance reviews. And that's when the system sees continuous missed deadlines, amended returns, sudden change in profit, repeated corrections. It automatically will classify the taxpayer as higher risk. And I've seen clients investigated purely because they submitted too late VAT returns, nothing more, no wrongdoing, just a little bit negligent and a little bit sloppy. So how do you protect yourself? Well, first of all, file everything on time. Even if you can't pay it, you're getting more lumber for not filing something than filing it on time and not being able to pay it. Keep your bookkeeping up to date monthly. I forget how many times I say it on videos, but please, every single business needs a bookkeeper that gives you accurate information every month, what you're making, if you're losing money, what your balance sheet is, so you can make better decisions. Use accounting software that syncs with HMRC. And if you don't understand the numbers, or if the numbers aren't make sense, get help early. Now, a late return is the equivalent of waving a small flag. Enough of them and you're waving a red one, right? Red flag number 3, excessive or unusual expense claims. So, I get it, everybody wants to reduce their tax legally, and that's fine, that's a game everyone plays. But if your expenses are too high for your industry or your income bracket, HMRC's analytics will flag it. So let's say you're a consultant, you're earning 60 grand a year, but you're claiming 40 grand a year in expenses. HMRC are going to ask, well, how are you living on £20,000? They're going to compare you against the national average for similar businesses. So if your pattern looks unusual, the system will just generate an alert. Now again, how do you protect yourself from this? Well, only claim what's legitimate. Keep receipts, digital or physical. Don't inflate mileage or home office claims, and use a proper accountant for sanity check deductions, okay? You don't be doing this stuff yourself. Listen, I can plaster my wall at home, right? But the end result of me plastering a wall will be very different for me than me getting my mate who is a time-served plasterer. And that's the same thing with accountants. Yes, we can all put our own self-assessment in, but I want a professional to be doing mine. Now, honest mistakes look the same as intentional mistakes. You've got to evidence things, and that's your protection. Red flag number 4, large or frequent cash transactions. If your business handles a lot of cash, HMRC will look twice. It's not because cash is illegal, although it may be one day, but it's harder to trace. And HMRC now compares your declared income against card machine data, supplier invoices, stock purchases, electricity usage, delivery volume, staffing levels, even your opening hours. And if your numbers don't line up, the system will flag up. I've listened, there are restaurants out there, mechanics, tradespeople, takeaways, and they've been flagged because the electricity usage suggested higher activity than the declared turnover. And that is how forensic HMRC systems have become. So again, how do you protect yourself? Record every cash sale, reconcile cash daily, run cash books properly. Make sure your stock and supplier invoices match your sales. Cash isn't the problem, it's the poor recording of the cash that is. And we've heard a lot about this one. Red flag number 5, lifestyle doesn't match declared income. And this has really shocked people recently, but HMRC will check lifestyle indicators. If you're saying you're earning 25 grand a year, but you are driving a bloody Range Rover, you're buying a second home, you are constantly on Instagram, hashtag Dubai, or flipping going to the States, 4 or 5 holidays a year, you've renovated your house, your kids are at private school. HMRC and me are going to be thinking, how do they fund that lifestyle? Because now, with the new systems they've got, they're going to cross-check the data, DVLA, land registry, airlines, passport records, social media, Airbnb, crypto platforms. Now, if your lifestyle suggests a higher income than you declare, HMRC will write to you very quickly. They're going to go, what's going on here? Now, how do you protect yourself from that? Well, you keep proof of everything that you're doing. If you've been given an inheritance, document it. If you've taken out loans, keep loan agreements. Record all non-taxable source of funds, because without documentation, HMRC are going to assume it's income. Now, if you are one of those that looks like a baller on social media, but in reality you're only putting a little bit through HMRC, you're the person that they're going to come after. Now, what do you do if you're already worried? Listen, if any of these red flags sound familiar, don't ignore them, okay? And when you're stressed, and HMRC writes to you, the chances are you're going to say the wrong thing, and it makes things worse. So the smartest move is simple. If you're starting to feel the pressure from HMRC, you've got to get your documents, get all your ducks in a row, understand your position clearly, and get a professional to review the risk, okay? Don't ever respond to HMRC in panic. Let someone trained deal with the communication. HMRC doesn't need to guess anymore. The systems see everything instantly. They know exactly what's going on in your house. But if you keep clean records, you declare properly, and you stay consistent, you'll stay off the radar. If anything I've said has worried you here, right, what I want you to do, I want you to go and watch this video. I interview Salman Anwar. He was an ex-HMRC tax investigator. And this guy is going to tell you exactly what happens to trigger these investigations, and he's going to go into a deep dive of what you should be doing. So if you're worried about what I've said so far, go over to watch this podcast with Salman Anmar. It is an absolutely belting episode and it'll really help. Thanks for your time, Chris Worden.